We are on the job hunt as Washington makes job creation a top priority. Tax experts, though, say the United States has one of the worst tax policies in the world when it comes to creating new jobs. U.S. corporations face an average combined tax rate of 39.1%. That is the second highest rate among industrialized countries, right behind Japan's 39.5% combined rate. Jim Angle is live for us in Washington. Jim, most people think Europeans and other major economies have higher taxes than we do, but I guess in this one key area, that's not true?
Absolutely right, John. The total tax burden for Europeans is an average of 38%, 10 points higher than the U.S. at 28%. But that is a measure of income and sales taxes, or in Europe, a consumption tax known as a value-added tax. Although U.S. income taxes are lower, we have other taxes, as you pointed out, that are higher than the Europeans. And oddly enough, they punish savings and investment more than the Europeans do. Listen to this.
There's a big misconception that Europe has much higher tax rates than the United States. And that's no longer the case in many aspects, especially when it comes to corporate taxation. Europeans, in particular, have much lower corporate taxes than the United States.
Now, as you pointed out earlier, John, the U.S. has, including state taxes on corporations, about 40%. Many of those in Europe have corporate taxes in the 20s and 30s. And a grouping of 30 major market economies known as the OECD, which includes all the Europeans, did a study of what the most counterproductive tax had been in all those nations. It identified the corporate income tax as the most harmful for long-term growth. John?
Interesting, Jim, that you found that what was once the world's biggest communist economy has actually gone further than the U.S. to try to reduce the tax burden on corporations, huh?
Yeah, it's interesting. You know, we're talking about China, the world's most populous nation, once a bastion of communism. Now it has better incentives for job creation than the U.S. does in terms of taxes. China looked at what had worked in other countries and devised a tax system to encourage savings and investment. They have no tax on bank interest, no tax on capital gains, on stocks listed on their exchange, and perhaps most important, they have a 25% corporate tax rate, well below the U.S. rate of 40%. So the former communists are beating us, as one person put it, at our own game.
They wanted to lift 1 billion people out of poverty, so they reduced the taxes on saving and investment and capital formation. And they're growing very, very nicely in spite of the world financial panic.
So China's a better example of freeing labor markets from taxation that impedes job creation than the U.S. is these days. So we've got a lot of, including the Europeans, a lot of otherwise high tax states that have found that cutting corporate taxes is the way to create jobs. John?
Jim Angle in Washington, thank you. And if you